Now more than ever, rigorous cash flow planning projections are necessary to manage tight resources in times of increased need. A cash flow projection is a financial representation of anticipated cash received and cash spent. It shows whether there will be enough cash on hand to actually pay bills at various points over the fiscal year. By developing a visual landscape of cash flowing in and out, there will be more certainty about whether and when cash will be available to meet future operating needs when they arise. The ability to estimate how much cash will be available gives you a better sense of your organization's financial health and ability to tolerate risk. We hope you will find this a useful tool in projecting cash flow, either monthly over a period of 12 months, or in these challenging times, weekly over a period of 13 weeks. We'll take the next few minutes to orient you to the tool so you can begin to apply it to your organization's needs. Note that all of the instructions I share are also captured on the Instructions tab in the Excel file. A few items to note. As mentioned, the spreadsheet offers two tabs, a monthly cash flow projection and a weekly cash flow projection. Input on each tab will follow the same approach, but either for a full month or for a particular week. Note that the tabs are independent of one another. Begin by entering your organization's name, the fiscal year, and your approved fiscal year budget. This will serve as a guide to the total dollars you expect to flow in and out over the year. Notice that all input happens in cells where the text is blue. Projected numbers are the cash amounts that an organization expects to receive and plans to spend in each month. Complete the spreadsheet using the suggested category for each entry. Broad categories have been suggested, and we encourage organizations to make use of them. However, additional spaces marked Other can be used when an item doesn't fit into a broad category as provided, or to customize the spreadsheet to your organization's unique requirements. You may also insert rows for additional line items. Instructions for inserting and deleting rows can be found on the Instructions tab. You can use the outline function by clicking on the numbers in the top left corner of the spreadsheet, or the plus and minus buttons located on the left axis and the top axis. This will enable you to expand and contract the spreadsheet based on the level of detail that you are interested in seeing. Finally, the tool is organized into various sections. First, operating cash without restrictions, then restricted cash, and non-operating cash. Let's populate the tool. First, enter your beginning total cash balance. Total cash includes operating cash without restrictions, non-operating cash, and restricted cash at the beginning of the month. Use rounded numbers to the nearest dollar. For this demonstration, I will enter information in thousands of dollars. In this example, we have $200,000 total cash. Next, enter the operating cash balance without restrictions. This is your total cash balance minus restricted cash. In this example, of the total cash, $100,000 is without restrictions and available for operations. Note row 6, beginning operating cash without restrictions after financing activities. There is no entry needed here. This row will ultimately reflect your beginning operating cash without restrictions, plus or minus any additional cash that is derived from financing activities, so you have a sense of the degree to which debt impacts available cash. These rows show us the resources we have on hand at the beginning of each month. Now, let's enter our activity for cash without restrictions in rows 8 through 90. Let's start with cash receipts. These cash inflow categories reflect the different ways in which cash is coming into the organization and the timing with which they come in. Beginning in row 10, you will capture operating cash receipts without restrictions. Operating cash receipts without restrictions include earned income, which is cash received in exchange for services or products. In this example, let's say program fees of $10,000. It also includes contributions, which is donated cash received whose spending is not limited by legal or contractual obligations. In this example, let's say Foundation A, $25,000. And finally, it includes cash released from restriction. Note, this line contains a formula which will be automatically populated as releases are entered in the cash with restrictions section below. Recall, earlier I described that the tool is laid out in various sections. Therefore, this activity will be captured in that section and flow automatically here. Cash released from restriction is cash that is released from obligations due to satisfaction of donor-imposed stipulation with respect to purpose or time, now free to be spent. For example, maybe this is a program restricted amount where your funder lifted the restriction. Or maybe it's the portion of a multi-year grant that you're now allowed to spend. You'd release the amount that you are allowed to use. In this example, we'll release $10,000 of restricted resources, which have met their time or purpose obligation. So in this example, there's a total of $45,000 of cash receipts without restrictions due to operating activities in month 1. Next, let's enter our operating cash spent. These are the ways in which the organization is using cash. We've suggested broad categories, but you can customize as you see fit. For example, personnel. These are expenses associated with the cost of having employees, including salaries, benefits, and taxes. For this demonstration, we'll just enter a total of $15,000 this month. Professional fees. These are fees paid to third-party professionals who are not directly employed by the organization. For example, lawyers, consultants, etc. Let's enter $5,000 for this month. Occupancy. Operating costs associated with a facility, whether leased or owned. This would not include principal payments on debt, major repairs, or replacements. We'll enter $3,000 this month. All other, which we'll call support. This would capture all other items not included above. For example, program-related expenses, copies, office supplies, insurance. Let's enter $2,000 this month. And don't forget interest on debt. Any interest payments associated with long or short-term debt that you might have. So, in this example, there's a total of $25,000 cash without restrictions spent on operating activities in month 1. Row 91 reflects the net cash from operations. That is the difference between cash in and cash out. $45,000 of operating cash receipts in month 1, less $25,000 operating cash spent in month 1 equals $20,000 in net cash from operations. Rows 94 through 97 allow you to capture activity for cash with restrictions. Again, this is the area that captures any new restricted cash that is received but cannot yet be spent due to donor restrictions, as well as the restricted cash released in the period. That cash that was restricted and is now able to be spent. As noted previously, when you entered the number here in row 96, it automatically carried up to line 38 above. Row 97 reflects the net cash with restrictions. Once populated and inquiries related to cash from operations above are exhausted, organizations will better understand if they need subsidy and financing. Rows 99 through 105 allow you to capture this and other sources of non-operating cash activity. Cash which is not related to the organization's programs or other main activities, but we include it because it's still cash that's either coming into the organization or that we have to spend, but it's for things outside of our core operations. Examples of non-operating cash receipts include receipt of cash drawn from an organization's line of credit, the receipt of long-term debt, capital campaign contributions, and other one-time or extraordinary transactions. Examples of non-operating cash spent can include payments of debt principal, and things like capital expenditures. Row 105 reflects the net non-operating cash. This is the total non-operating cash receipts minus non-operating cash spent. Finally, row 109 reflects the total ending cash balance, which equals beginning cash plus or minus all of the activity from your operating cash without restrictions, restricted cash, and non-operating cash. This shows how much total cash you have left at the end of the month. This then becomes your beginning total cash balance in the next month. Similarly, the operating cash without restrictions in the period reflects last month's ending balance. With the beginning balances automatically populated in rows 4 through 6, you can now enter the projected cash in and cash out in each of the subsequent months or weeks in each of the 3 sections for a full year of projected cash flow. As you progress through the year, you can type in your actual results at the end of the month or week. Actual numbers should be filled in after the month or week is finished. As you record your actual results, type over the respective projections with actual results. Change the name of the column from projected to actual. You can now make adjustments to your future projections based on more recent information you have now. An accurate projection lets management and board see if and when the organization will face cash flow shortages, so you can then have meaningful conversations about what to do. Once you understand your organization's current cash flow, it may be helpful to then plan for different scenarios.